Infinite Banking for Dummies, Part 4, Rules of Financial Freedom. What are the 3 rules of financial freedom? Hi, my name is Sunny.
And I'm Alex.
We are the founders of Bright Horizon Wealth. Don't forget to leave a like and subscribe to our channel to get a new video every week on Tuesday and Thursday.
By now, you must have heard the 3 rules of financial freedom given by Brian Tracy: savings, investment, and insurance. The rule of savings says pay yourself first. The rule of investment says pay yourself interest. And the rule of insurance says never lose money. In other words, insure your money by making sure you get back all the principal and interest that leaves your wallet month after month and year after year. Also, ensure that you have a death benefit in case something unexpected happens to you. And the death benefit insurance element is already built in here. In regard to rule number 3, Mr. Warren Buffett says there are only 2 principles of money. Principle number 1 is make sure you never lose money. And principle number 2 is, whenever in doubt, refer back to principle number 1. Now, the question is, how can someone make sure they never lose money? The answer is found in these 2 words: make sure. In other words, ensure. The only way to ensure something is to insure it, and thus we reach the insurance component. The secret of infinite banking can be summed up in 2 simple words: recapture and reinvest. Recapture by getting back all the money that is currently leaving your portfolio and reinvest it in an insured and guaranteed vehicle. The whole infinite banking premise rotates around compound interest. Now, you might ask, where do I get a guaranteed compound interest rate? And the answer is, there are only 2 places that you can get compound interest with certainty: either a bank CD or a whole life insurance policy. What? What in the world does insurance have to do with what we're talking about today? Well, through this series, we've been building on the idea of you being able to earn compound interest, and we need to be able to tell you where you can get it. And you can get it through a whole life insurance policy. And the reason why whole life insurance was suggested is because of the reasons that we discussed when comparing the bank CD to a whole life policy. When you pay a life insurance premium, there is cash value or liquid cash that grows based on what you have contributed within your premium and the money that grows in your account, which is considered cash value growth at a tax-free rate, and if you utilize it in a form of a loan, it is tax-free distribution, so you are not claiming any income on that money. The guaranteed values are super important to understand because they are paying at a 4% compound interest rate, and if you choose to do business with a mutual life insurance company, they will also send you a dividend check at the end of the year. The other thing to note is that you are in complete control of your policy. This isn't like a retirement account where you are penalized for utilizing it. It wouldn't surprise me if you said, I don't like those RMDs, which stands for Required Minimum Distribution, in my retirement account. The other most important thing is the measurable history of success, that how they have been sending people a dividend check year after year, some of them for as long as 100 years. Well, I know what you're thinking. If this whole life insurance product is so great, who knows about it, and why haven't we been taught about it? Well, we've got that covered too. Let's look at government officials like former Vice President Joe Biden with $19 million of cash value in his whole life insurance policies. When I say cash value, again, I mean liquid cash that he can tap into at any time, and this is tax-free money. Then again, the late Senator John McCain actually funded his presidential campaign with the money from his whole life insurance policies, tax-free. How about Fortune 500 companies? They have utilized whole life insurance to either fund their business or are continuing to fund their business through their whole life insurance policies. Walmart, Disneyland, Home Depot, McDonald's, AT&T, CVS, Nike, and JCPenney, to name a few. I have talked about the government. I've talked about corporations. Guess who else knows about this? That's right, the banks. If you do the research on your own, you will find Citibank has $4.5 billion, JP Morgan Chase has $9.8 billion, Wells Fargo has $19.3 billion, Bank of America has $18.5 billion. These numbers represent the cash value that banks have access to, again, tax-free at their disposal. The banks want us to go in debt so that we can create a form of cash flow for them by paying them back every single month, and they want our money to remain in the bank accounts so that they can utilize our money to make more money. We want to work alongside them. We don't want to play in their game and buy the products that we have been sold as consumers. And that's where infinite banking comes in, by enabling us to become our own bankers. Look out for our next video, and make sure you own your own financial future,
or someone else will.